following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. It's a TGIF long weekend, folks. Let's make it a great weekend. Please be safe out there. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that's happening right here, right now. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow down 4. NASDAQ is flat. S&P's the flat. Gold contracts up $11.80 at $12.68 an ounce. Silver up 15 cents, $17.34 an ounce. Platinum up 13 bucks, $9.61 an ounce. Copper's down 3.5 pennies at $2.55 a pound. Light sweet crude up 90 cents, $49.79 a barrel. Notes, 10-year note up 2 ticks, 126.07. 30-year bond up 5 ticks, 154 flat. King dollar up 144 ticks, trading at 97.320. The euro's at 111 to the U.S. dollar. The yen is at 111.23 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, so this is what we have. Right now, you get a flat market. We're at 241.68 in the SPY. If you take a look at this and we put this on a weekly basis, you're going to be closing over the highs out here. I don't expect we're going to get any action. Yeah, you get anemic volume. There's no doubt about that. Bottom line, on to next week. Bottom line, and what you do have coming into next week, by the way, Tuesday will end up being a slow day, and then you're coming right into window dressing. Dow Industrials. What do we have with the Dow Industrials? Dow Industrials also a flat market out here. Now, the difference in the Dow is that we are not at the highs. What the Dow did do yesterday is that it got over the past 3 highs, going all the way back to the 26th of April. The high in the Dow is at 21,169. Thus far, yesterday you hit the 21,000. $1.12. You closed out at 21,082. Right now, we're at 21,080. NDX 100 as well as the composite, they're both at highs. Composite right now, flat market, you're at 62.06. NDX 100, that is laying out here at 57.84. Let's just go see if Amazon has hit the $1,000 mark yet. Nope, yesterday, so check it out. Yesterday, folks, you hit $9.99. Today, we hit $998.65. Gold contract. What do we have with gold? Gold contract, folks. Sorry, folks, excuse me. Gold contract getting over its B point. You're up $11.50. You've done 253,000 contracts. This is a good number here. So gold is making its way up to this swing point of 1297. We're 1267 right now. That is the April 17th swing high. When you take a look at this, we don't have a confirmed ABC up. The reason being is that when gold took off topside last week, on the 17th of May, we had 378,000 contracts. On the 18th, we had 369,000. Bottom line is getting over that. Big volume, but not as much. So you have to take it out with volume. We're 253, which is great volume, by the way. Bottom line, I expect you're going to see us get up into that level. Silver has also caught a bid. Platinum caught a bid also, even a bigger bid. Silver up 15 cents. You've done 64,000 contracts. Once silver got back inside the $17 area, you're in the higher range. I expect what you're going to see, silver's going to now try to make a run up to this $18 area, and we'll see what kind of juice it has. Notes. The 10-year note, 30-year bond. This is an amazing market, this note and bond market, folks. Fed saying, hey, we're going up on short-term rates. Note and bond market saying you can go up as much as you want. People are still buying them hand over fist. There's less supply than there is demand. Bottom line, your swing high out here inside the 10-year is 126.20. We hit 126.12 today. We have 1.8 million contracts, big contract volume. Last 2 days, yesterday you did 2.4 million, the day before you did 2.3. So what you also have here is that you're pushing into the swing high, and you're already into the bar, and you're right next to the bar with volume. More than likely, we're going to see, whether it's Tuesday or Wednesday of next week, this thing wants to break topside. And this is a very large ABC structure, I suspect, on the way up. Will bring us up to the 128 area. When you take a look at the 10-year, the 10-year is trading at 2.246. And that 10-year, that is at the lower end of the last 6 months. The low for the last 6 months is 2.168. The high is 2.6. Last year, different ball game. Last year, we're slightly over the middle of it because we got down to 1.358. And King Dollar, folks, just can't hack it. Now, King Dollar hasn't been able to do a counter trend bounce. This has been a one-way trade, since the January 1st. Yeah, pretty amazing, actually. January 1st, we were at January 3rd, we were at 103.750. You're at 97.340 right now. This couldn't even hold price again today. If we put this on a continuous contract, what you're going to see out here, I'll put this on a weekly, you're going to see it's been a one-way route all the way down. Now, the bottom of the bar that it's digging into right now is 95.90. What we already have done, and we've done this with conviction, is that we broke the trend line that comes off the low and good old King Dollar, which goes back to May of 2016. And that low there, folks, is 91.880. So the way that's set up on a longer basis, that's where it wants to go. It busted higher in November, couldn't handle higher price, stayed up there approximately 8 weeks, then came barreling back inside the consolidation that it's been in, and it's been in this consolidation for quite some time. So bottom line, what I expect you're going to see is good old King Dollar is going to be making its way down into that 91 area on a longer-term basis. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now down 1, Nasdaq's up 2, S&P's are flat. Gold's up 11.30, silver's up 15 cents, platinum is up $13. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And folks, if you'd like to test drive the Gold Report, the way you do it, you come over to our website at TFNN.com. You go to newsletters, you can go to the Gold Report, you can test drive the Gold Report 30 days absolutely free. If you'd like to test drive my daily newsletter, Market Insights, you can do that for 2 weeks. You go to newsletters, hit Market Insights, test drive that 2 weeks absolutely free. Now, let's go over, we're talking about Bitcoin the last few days, about the parabolic move. Bottom line, now comes the crash, folks. Yesterday we got up to a price point of $27.98, and the price spread yesterday was pretty amazing. The price spread was from $23.20 to $27.98. It ended up closing out the day at $24.65. As we come into the close out here today, we'll see how this shakes out. But right now, it's down an additional $346 at $21.99. Now, if you take a look at this, it's not only parabolic, but let's just put some fib numbers on this, because not even a parabolic move, just a normal correction in a market that wants to go higher. So let's just say that that's what Bitcoin wants to do. A normal correction that wants to go higher, a 50% correction, would be $18.65. That'd be quite a move. $900, you know, and a market that can go a lot lower. That is when you come down to $16.47. And all I'm taking that move from, folks, which is pretty amazing, is going back to April 1st. That's how that's shaking out. It's a wild one, no doubt about that. Now check this out. This is pretty cool. So we know the market's been running in an extraordinary way, right? Well, watch this statistic. This just came across the Bloomberg. So let's see. They're taking today into consideration, right, that one of the longest streaks inside the S&P that it did not have a 5% drawdown from the peak was in 1996. Now, I remember this one very well, too. That went 231 sessions, not just days, sessions, okay, so the market's open, without a 5% drawdown. That was the 6th longest since the inception of the S&P in 1950. Right now, we are running, there are some ways, right now, we're the S&P went 394 days, year and a half. Okay, so actually, Oh, this is amazing, actually. I got to read this whole thing. Sorry, folks. There's a lot of stats in there. Okay, so this is what it says. Perhaps unsurprisingly, punters have little interest in buying and selling stocks ahead of the long weekend. Volume thus far in the S&P 500 is about 25% below the average in the past 100 sessions. So that makes sense. So we can chalk up today as another one since we had any sort of proper dip, a decline of 5% or more. In fact, the current streak, this is the current streak. This is pretty wild. The current streak right now is 231 sessions without a 5% drawdown from the peak. It is the longest one since 1996 and the sixth longest one since the inception of the S&P 500 in the 1950s. There is some ways to go before a new standard for straight line gains begin, however. The S&P went 394 trading days. Oh, this is amazing. This is 1996, which is a year and a half without a 5% drawdown in the mid-90s. That was pretty amazing. And you know what happened there, too? The thing that's pretty amazing about the mid-90s, if I bring this up, I'm going to bring this up, so I'm going to show you this. Because what had also happened is this, is that because that was so long, it was a year and a half, so I got to bring this back. I'm going to bring this back at a quarterly basis. I got to find 1997. Okay, so let's see. I'll bring this 1995. I'm going to bring it to 1995 to 1998. We'll do it that way so you can kind of see. Okay, so if you're watching Tiger TV right now, you'll see that I have this on a quarterly basis. Maybe I can put this on, let me put it on a monthly basis first. Monthly, I got to do it a different, okay, so I'm going to put this on a monthly. 1995, I better make it 1994. To 1997. That's what I'll make it. So we got, okay, much better. So when we get into 1996, there it is right here. What you're going to see is this, is that, so that was the longest streak before this, a year and a half. Now, that being said, we're going to look at the cash S&P so you can see what this looks like, right? So I'm going to show you, let's start at the beginning of 1995. Okay, so the beginning of 1995, we are at, there we go. We're at 471 on the S&P, right? What we did is that it was a straight line move, 471, and so that's January 1995. Now, if I bring you up to 1996, in February of 1996, we're at 664. So you had a basically 50% move, right, up. Now, this is what you did, folks. We had a 50% move up, and then you went sideways for an additional 5 months. And even on that sideways move, what people were always used to is basically not losing money. So what had happened is this, is that the leverage that people got into was pretty heavy. Now, that's not the point of the story. The point of the story is this, is that investors got complacent in a huge way. Then the market went sideways. Still, people didn't lose money. Now, watch this, because I remember this so well. The S&P, folks, only went from 675 down to 605. Okay, so that's a 70 points, right? So 70 points, you're talking about a 12% correction, right? Well, in that 12% correction, you wouldn't believe how many people actually got wiped out of the marketplace. It was like, it was pretty intense. And what that had to do with, it had to do with the complacency, but what it also had to do with the amount of leverage that was actually in the marketplace. You know, when I look back at that, I remember how bad that was. You know, you could go, it didn't matter where you went to, meaning, you know, people were talking about it, and there was people wiped out, and I don't know if they ever got back in to 2000 or whatever. But the bottom line is that the complacency that took place on that move was amazing. And if we look at our own markets right now, our own markets are not only complacent. We're 24.15, and it's intriguing because when we actually take a look, if we take a look at the move here, the move has been extraordinary. We had the straight line move. You had the straight line move coming off of 2016. 2016, the S&P is at 1810. You go straight up, and now we've been up at this level now for quite a while. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now are down 3. Nasdaq's up 2. S&P's are flat. We're going to right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 5. Nasdaq's up 2. S&P's are flat. And if we take a look at this, Bitcoin's going to be interesting coming into. It's not that the hours are not the same as our trading, folks, but bottom line is that coming into a long weekend, it's getting a lot of pressure. Right now, you got it down 381. You're at $2,084. And bottom line is that that's down $700 in all of a day. So this thing, I suspect as we come into the close out here, there's no reason this can't be down into 1961. pretty intense, no doubt about that. Let's go inside the NDX 100 and take a look at the strength versus the weakness. Inside the NDX out here today, you got Sirius Satellite is up 3.6%. Alta Salon is up 3.3%. Tesla's up 2.3%, and NVIDIA is up 2.2%. Now, NVIDIA is going to get really interesting once again, man. When this stock takes off, it takes off. You know, you're at $141. You're at highs. And then what you also have is that coming across the tape, SoftBank is said to consider raising its stake in NVIDIA over time. SoftBank, the Japanese company that raised a $93 billion fund for technology investments, is considering boosting its stake in chipmaker NVIDIA. People familiar with the matter said the firm would raise its holding over time and begin to work more closely with NVIDIA. People said asking not to be identified because the deliberations are private. While we don't comment on rumors about our investments, we consider ourselves long-term partners in companies, whether private or public. SoftBank had bought a 4.9% stake, just under the amount that would require regulatory disclosure in the United States, making it the fourth largest shareholder in the graphics chip maker. People familiar with the situation said previously. The holding has a market value of about $4.1 billion. Now, if we go over and we take a look at the insider holdings right now, using the 13F, what you're going to see, there it is right there, 4.9%. Now, what does happen is this. So Fidelity owns 10.3%. Vanguard owns 6.3%. BlackRock owns 6%. Now, Vanguard, BlackRock, and Fidelity, most of that are all funds. SoftBank, bottom line, that's a fund, but that's a private fund. What will happen, and that's why they keep it under 4.9, is that they don't have to file until they're over 5. When they're over 5%, folks, if you bought or sold anything today, you're going to file within hours, and then that would show up. So this is when we take a look at this gets really intriguing, because you can see if you're watching Tiger TV, you can see that yesterday BlackRock had a file. They bought an additional 2.2 million shares. That was on the 25th, and more than likely, what that has to do with it, that I suspect what that has to do with is that is going to be in one of their ETFs, because BlackRock owns so many different ETF structures. Inside the Dow Industrials out here today, the strength versus the weakness inside the Dow, putting points into the Dow Industrials today. You got Goldman as the leader. That's putting 9.9 positive points. 3M putting 7. Disney putting 6. Taken away from it, Home Depot's taken away 10. IBM's taken away 5. You get Johnson & Johnson taking away 4. United Health is taking away 4. We go take a look at the oil market. So what we had out here yesterday, oil got absolutely taken apart. The crude oil yesterday was down 5%. We're up 1.8% now. And let's see what we're up on. Okay, so that's not bad. You know, you got to a lower low, had lighter volume, rejected a lower low. Let's go over to the XLE, because the XLE looks like it's going to basically do a monster ABC down, folks. The XLE yesterday went from 68 to 66, huge expansion of volume. If we put this up on a weekly right now, what you're going to see is that the high volume swing low is at 65.83. And it would have been much better if, in fact, we hit it this week, and we didn't. It's laying right above it. We are at 66.51 right now, where the swing low is 65.83. For the whole week, you hit 66.16. And bottom line is that that's always dangerous when you do an expansion of volume, which we're going to have, and you're laying at those lows. If we go take a look at ExxonMobil, you're going to see ExxonMobil also laying right at this low. And with the remarkable thing between Exxon and Chevron is that they have been going sideways since the beginning of this year, where oil caught a nice bid. Oil, just went from 45 to 52. Not the stocks. These stocks here, they're hammering the bottom. ExxonMobil's building costs to go after this $80 price point. Right now, you're at $81.45. We go take a look at Chevron. Chevron is trading at 104.64. this has been building cause for some time, and it's pretty incredible, actually. Because if this breaks this B point of an ABC down, it's a monster. Chevron would be saying it's going to be down to 97 in a heartbeat. So we're at 104.63. That low that's going after is 103.84. Yeah, there's some real action. Now, what we are going to have when we come back, so you picture, you get the long weekend. Tuesday we come back. Tuesday's going to be a slow day. Wednesday, Thursday, there'll be some action, but as we commit to summer trading, Mondays and Fridays, bottom line, on both sides of that, you're going to get less action. We're also coming into window dressing, last 2 days of the month, first 2 days of the next month. Normally that is a bullish bias, and we've been in a bullish bias for quite a while, but that in itself is a bullish bias, because what happens is that on the last 2 days of the month, portfolio managers are basically decorating their portfolio. They're trying to buy what has been good, get rid of everything else. The first 2 days of the month, that's when all the 401k money comes in to the markets. And the reason that it's bullish, folks, is that fund managers do not get paid on cash. So what ends up happening is that hundreds of millions of people have money in their 401k. It gets taken out, whether it's $100, $50, it doesn't matter. It adds up to huge amounts of money. It goes into the marketplace, and the mutual fund and fund advisors put that to work if they want to get paid for it. Most of the time, they put it to work. That being said, I expect what you're going to see, and this is still coming off that bond market, is that this market, bottom line, that if bonds continue to want higher price, it's just a matter of what day that we turn around and you're going to see this little baby get hit, and I expect, it'll get hit pretty good. More than likely, the way that this market is setting up, it looks like it's going to be the dollar that throws a wrench in this whole deal. Because a fast currency move is what can take markets and take them south pretty quick. And, we've stepped down, not in a fast basis, but basically pretty fast, for the last 6 months. And we'll see in this particular case, how it comes down to the lower end of this consolidation. And the lower end of this consolidation, by the way, if we take a look at this, the 91 area is really important. And the reason being is that we've been in this consolidation since February of 2015. Because if we break that 91, then you got 87 coming at you. And that would be intense. You stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Dow is down 6, Nasdaq's up 1, S&P's a flat. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2019, 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now is down 10. You get the NASDAQ, S&P's flat. And just to take a look at what kind of anemic volume we're going to have out here, you're at 432 million on NYSE, so that they should be able to at least put the 650 into it. And the composite, we're at 1.2 billion. That should run about 1.5. So bottom line is that you are going to be at highs with dramatically lighter volume. The SPY right now, you've done 25 million shares, and just to say, remember, that we took out 149 million. We did that yesterday, and we did that with the 64 million versus the 149. NDX 100, as we ran into the NDX 100, what you have with the NDX 100 today, you get 9 million shares. Bottom line is that you did 23 million, which was taken out the last swing point that had 21, which is totally anemic, as we go downtown with 55. IWM, small caps, still haven't been able to get traction. This is pretty amazing, actually. The reason I'm saying it's amazing is that the small caps have been in this consolidation since December of 2016. Hasn't been able to get up and over it. The small caps got up and over it twice and failed both times. We got up and over the consolidation in February, went right back inside it in February, then got over it in April and came right back inside. And when you take a look at this, and we put this on a weekly basis, and you actually put some channels underneath it, what you're going to see is that the force is downtown here. You know, we came down last week with 189 million shares. That was going into 198 million shares. The highs have been established with 162 million shares as well as 161 million. So bottom line is that we'll see how this shakes out. The low from last week with the 189, when you look at that what normally happens there is that you can see that we actually had an expansion of volume as you went back downtown again. If that was laying out a bottom, folks, okay, what you'd be looking for is not the expansion of volume. You'd be looking for a contraction of volume. You still have high volume, but a contraction versus the expansion. And last week, we absolutely got the expansion of volume as we were coming downtown. We go take a look at Big Blue. Big Blue hasn't been able to catch a bid in a long period of time. In the course of 3 months, Big Blue's gone from 180 to 150. This also not only is in trouble, but it looks like it's setting up an additional ABC structure on the way down. It looks like Big Blue, when all said and done, this wants to go back down and test those lows, which is pretty intense. So the high of the low, which was in January of 2016, the high of the low is 136, the low is 118. And, you know, it topped out going back now to March of 2013 at 215 bucks. Pretty intense, actually, when you take a look at it. Now, let's go to the big dog again. Big dog, Amazon. So, Amazon, folks, is going to close out at the highs, right next to them. Bottom line for the, and it's not only closing out at the highs. So, the high of last week was 970. You're at 993. So, that $1,000 level is game. The thing that's amazing when you actually look at Amazon is that February of 2016, Amazon was $474. And it just it's done two legs. The first leg started in February, 474. It goes up to October, 845. Then has a fast, vicious correction. It goes from 845 in October to November 18th, goes down to 710. So $130, and then just doesn't look back again. Goes from 710, and the high thus far is 999. Google also looks to me like it wants to hit that 1,000. We hit 974 today. You're at 970, and you get this close to that type of even number. It's not that it has to hit it, folks, but people are looking at it and say, hey, geez, 4 weeks ago, Google was at 849. That's an expansion. There's no two ways about that. Facebook right now is trading out at 151, staying at its highs. And then Apple, and these are the ones, by the way, they just continue to drive the NDX 100 in a huge way. And it's not that they're the largest leaders every day, but they haven't given up a thing. Apple's got a little bit different spin on it. It's staying up at the highs. Hasn't been pushing them, though, because the high in Apple's 156. You're at 153. It doesn't mean it won't push them either. I suspect we're going to see them push, and not only push, but more likely will push with some juice behind them. Microsoft, new high out here today. You're 69.97. That, baby, just went to a brand new high. Light volume, but bottom line, brand new high. And what you see there is that that's going to be, I suspect, the beginning of window dressing. That's what we have there, because you're going to be able to run those things pretty good Tuesday, Wednesday, probably Thursday. We'll see who blinks first. But when you get a run like that, and you got to remember something, that the NDX 100, when that thing, the dot-com bust came, the last 6 weeks before the bust came, I'll bring this back so you can see how intense this actually gets. So 1998, and we'll make that 2000. See what okay, so I got to spread this out a little. So check this out. In October of 1999, the NASDAQ was at 2346. By March, it was at 4,800. That's how fast it went. And that's what happens in types of moves like that. Now, just as fast, if you're around then, you know that the NASDAQ went from a price point of 4,800, and that was March 24th. And then by April, oh my God, that's intense. By April 4th, it was at 3,500. Yeah, 1,300 points off a 4,800 number was less than a month. Yeah. So we'll see where this shakes, because when I look at these equities, we're certainly not parabolic like that in the NASDAQ right now. But that's one. If that thing runs, you can expect that that's what you're going to see. And let's see. If we go right over to, let's just go see how Bitcoin is doing right now, because I expect that's what we're going to see straighten out here. So Bitcoin right now is down 215. It's actually come back at 2250. So with 2,800 to 2250. The volatility's out there. It's out there in spades. We go to the XAU and the HUI. We put these on a weekly basis. What you're going to see inside the XAU. And the XAU, HUI, metals in general, they held up nice, folks. That's the bottom line. We put this on a weekly basis. What you're gonna see out here. Right now you're at $84.60. Yeah, this is nice. I like the setup. Okay, so this is gonna make a run for $90.82. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow Industrials are flat. Nasdaq's up 4. S&Ps are up 1. We're gonna be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, don't forget, if you'd like to test drive either the Gold Report or Market Insights or both of them, very easy to do. Come over to our website at TFNN. You go to newsletters. As you pull down the menu, you can test drive the Gold Report. 1 month, absolutely free. The next edition will be out on Tuesday morning. Market Insights, that is my daily. That comes out every trading day. So Gold Report you get for 30 days free. Market Insights, 2 weeks for free. When we take a look at these markets out here, bottom line is I expect you're going to see flat markets out here. The dollar, so Sunday night what will end up happening is this, is that the whole world's not off. Sunday night you will see the currencies trading. You'll see gold trading. Our markets, however, are not opened on Monday. Monday night, 6 o'clock, that's when you see some real action start happening inside the indices. If we go over to the yen just for a minute, and the yen correlation that I want to do right now, this all has everything to do with the gold price. So the yen came down pretty hard out here today. We went from a price point of 111.85 to 110.88. You're at 111. If we go take a look at the Nikkei and just see the correlation, because it's a direct correlation inside the Nikkei And the Nikkei was down 126 bucks last night. We are at 19,686 now. This is pretty wild. The Nikkei, if it comes down 20 points more, it's going to be a failure at the highs. It had broken out. It broken out about 2 weeks ago. That's when the yen got weak versus strong. Okay, that break topside went May 8th. You're coming right back inside it. So this Nikkei on Sunday night, you absolutely, if you're in the metals market, you want to keep an eye on that in a big way. If we go over to the GDX and we take a look at the GDX, GDX out here, you're up 21 cents. You're at $22.92. You put this on a weekly basis, and what you have here is that you had a test of a low, you had a rejection of price. The GDX wants to make a run up to this $24.88, which was the swing high from the 14th. And this consolidation we've been in for a long period of time. That period of time was still trying to get through the downdraft that had been created out here on the election in November. That's when the GDX went from 25 to 20, so pretty intense. The small caps, if we take a look at the small caps, and our man Mike from Somerville, and I'm watching this right to 4:15, Mike, because this baby is laying out here at 1380.10. I know you had the 1386 binaries. I'm sure you're definitely going to make the bread on this. You might have taken these off already, who knows, but bottom line, our RT, let's look at this, AM7. This is about as intense as you get, because right now we just ducked underneath it. It's going back and forth on this 1380. Right now you're at 1379.90. Let me put this up, though. It looks to me like you're going to get it, because now what does happen is you get 15 minutes, but I'll put this closer, and what we just had here is that sell, oh, it's a nice sell. So in the future market, it was 4,000 contracts they're pushing into it. So we'll see whether they get 1379.40. 1379.40 is that lowest swing point out there. But bottom line is that you're going to be sitting on that seat here for about 15 or 20 minutes. And don't forget, folks, you can get us 24 hours a day right on your cell phone. You go to TFNN.com. And if you've never tried the cell phone, folks, please try it. It's a great way to pick up TFNN. You get Tiger TV, so you go to TFNN.com. On the right-hand side, you're going to see a little box, and it says mobile device. You just hit that mobile device. Our servers know exactly what type of device you're on. You'll get Tiger TV right to your phone. And the type of clarity you get is absolutely phenomenal. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Have a great weekend, safe weekend, folks. Look forward to speaking right back here, Tuesday, 8 o'clock in the morning. Wow! Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.